Well, look, after a very strong January for markets, obviously the US job reports came as a shock, and then bond yields adjusted upward. This was offset by the disinflationary rhetoric by Mr. Powell. But obviously tomorrow, if we do see a reacceleration, which is higher than expected, then the market will have to adjust to the reality that maybe inflation is stickier than expected. And then we'll see bond yields moving higher, creating some volatility on the equity markets. On our side, we believe that we continue to be in this normalization process. That's over the coming months, inflation will come down, while growth, might be more resilient than expected. But again, after this very strong January, we believe that there is more volatility ahead for risk assets.
Yeah, although you have decided to abandon your more cautious stance and you've gone, as I read in your notes, global equities from cautious to positive, and a number of other statements about where you feel that the benefit of that move may be seen. EM Asia, Eurozone equities also getting an upgrade, it would seem here. Does that mean that you've actually not made money over recent months where markets have been going higher, but you've been positioned overly cautiously?
No, the whole 2022 was indeed a year where, on the one hand, growth was surprising on the downside and inflation surprising on the upside. So it was time to be cautious on risk assets. And then during the fourth quarter, we saw some data readjusting and some sign that indeed inflation was heading south. And this is why, progressively, we have turned more positive on markets with some also key rebalancing. We believe that it's time now to look at non-US versus US, to continue to look at cyclicals, against the FANGs, and also to still keep some exposure to commodities, because that remains one of the best diversifiers if, for instance, oil surprise on the downside. So it's a progressive readjusting of a positioning, into risk assets.
But sir, sorry, who am I to disagree with you, sir? But you've missed the most enormous rally we've seen in years. For instance, the DAX has gone from under 12,000 to 15,000. It's put on a quarter of its value. The S&P has gone from a 35 handle to 4,100. Surely that was the time to be positive, and now is the time to be cautious. Haven't you got it the wrong way around, sir?
No, because we stay invested, also avoiding, let's say, some key casualties, for instance, into the highest speculative stocks. Indeed, the rally in European assets probably caught many investors by surprise, because, we're expecting, a deep EU energy crisis throughout the winter. Also, the China reopening played a key role. But for instance, we have been positioned on China equities quite early on. That was one way to play the China reopening. But indeed, European stocks seems to be the one with some tailwinds. And as you mentioned, the valuation was quite attractive. And this is why, we have seen these readjustments throughout the fourth quarter. And this readjustment might not be over.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.